Hello, and welcome back to Crypto Clarified. My name is Dovile Silenskyte, and I'm Director of Digital Asset Research at WisdomTree Europe.
And my name is Vinh Tran, Associate Director of Business Development at WisdomTree Digital Assets.
Today we are joined by Loren from UTXO Management, and we are discussing Bitcoin and Bitcoin investment in detail. It's a very interesting discussion for individuals and institutions who are considering having Bitcoin as part of their multi-asset portfolio.
Hello, Loren. Welcome to the podcast.
Thanks, Vin. Thanks for having me. Looking forward to having the discussion today.
Absolutely. So for those who are watching or listening and do not know about UTXO Management, can you give a quick overview about what you do, what your role is there, and let's start there.
Absolutely. So UTXO Management, we're effectively the sister company of BTC Inc. And so BTC Inc. is the company that runs the annual Bitcoin conference. We had our flagship conference in Vegas in May of last year. Are planning on having the next conference this year in Vegas again at the Venetian, 35,000 people. And then that conference has gone global. So we just got back from Abu Dhabi for Bitcoin MENA last month. And then we're also in Hong Kong for Bitcoin Asia. And so that's the conference side. And then the company also runs a media branch and Bitcoin Magazine, which has been around for a little over 10 years now. And so you can think of UTXO Management as really kind of the sister company asset management arm that's really looking to invest across the Bitcoin ecosystem. And so what we do is we try to leverage our expertise and experience within the Bitcoin space to find growth opportunities, any medium-term dislocations. And that's really kind of our thesis is that as Bitcoin grows and expands, we can find potential opportunities to generate attractive or interesting returns for our investors. And so I lead our investor relations, work directly with our investors and client base. But yeah, that's really high level of what we do at UTXO.
Thank you. Bitcoin Maxis.
We are.
And just to add to that, what do you think differentiates UTXO Management on the asset management side than other, I guess, thesis-driven managers?
Well, you kind of mentioned it. We're definitely Bitcoin Maxi, so I think that is a differentiator in and of itself, especially in the digital assets management ecosystem. Our view is that we can go a mile deep into just the Bitcoin ecosystem and really find the opportunity brought in first there. And so, so really that's the focus for us is just focus on Bitcoin. Leverage the growth that's going to happen in the space. When we view, the space to be 95% liquidity relative to other crypto assets, a lot of institutional demand is coming towards Bitcoin at least first. And so we want to really be the thought expert and the leader on what's happening within Bitcoin.
Got it. And that expands, I'm assuming, beyond just an allocation into Bitcoin, but within the entire ecosystem. Am I right?
Sorry, could you repeat that one more time?
And that expands beyond just an allocation into Bitcoin. I'm assuming you're investing within the ecosystem. And so what does that look like?
It's a few different levers. That's the number one question we get is, well, I could just invest in Bitcoin and hold it and appreciating in the store value characteristics of what it is. I would say that as Bitcoin grows from 2 trillion to what we believe will be a 20 trillion plus asset over the next decade, there's going to be companies, infrastructure, other things built for Bitcoin to really grow it. And we really kind of view the investment space as holistic. So obviously there are Bitcoin miners that are publicly traded. Bitcoin treasury companies has been a bigger theme over the last year and a half. Michael Saylor strategy. I'm sure a lot of your listeners know of him and what he's done with putting Bitcoin on the balance sheet of his company. And then infrastructure, custody solutions, layer twos, all of that will be built on Bitcoin as well. And so we kind of view the investment landscape holistically across really all those main verticals.
That's very interesting. And I spend a lot of time traveling all across Europe. And for example, today I'm in Milan airport, and apologies for that because I'm sure that sound quality and the visual quality is not the best. But when I talk to investors, institutional investors who are looking to invest into crypto for the first time, they always think about starting with Bitcoin. So going into crypto for them is having small Bitcoin allocation within their multi-asset portfolios. But the ones who have been invested in Bitcoin for the last 2, 3, even 5 years, for example, yesterday I met one of WisdomTree clients who invested into our product more than 5 years ago, and he is extremely happy because his portfolio performed super well. Just looking at how Bitcoin has, performed over the past 5 years, those investors start saying, okay, what is the best complement for Bitcoin? Like, what else is there in the ecosystem that could sit nicely alongside Bitcoin? And I always say, there's Bitcoin and there is everything else. Bitcoin is store of value. Everything else is the future of growth. Do you agree with this view? And how do you talk to investors who say, okay, I've been with you, I've invested in Bitcoin. Like, what else can I do in this ecosystem?
Yeah, no, it's a really great question, and I agree with you. It really is Bitcoin and everything else. And I think, I came from the traditional allocator side, investor side before joining UTXO. And I would say, investors really think about diversification and they think about, how their different buckets are diversified within themselves. And so they view digital assets as like, okay, well, if I have Bitcoin, I got to have all these other protocols. I got to have Ethereum. I got to have Solana. I got to have some access to maybe some earlier stage tokens. Our view is that Bitcoin is the diversifier. Having Bitcoin in and of itself is a diversifying aspect to everything else that's in your traditional portfolio. If you look at the historical characteristics of Bitcoin, it's typically been uncorrelated from every major asset class out there. It's liquid. So it's diversifying from, say, your other alternatives that are maybe more illiquid within private equity or private credit. And then it's shown to have positive skew, meaning that your upside has been far greater. Your upside deviation has been far greater than your downside deviation. And so we always talk about the drawdowns and the volatility of Bitcoin. But if you look over its history, it's been a positively skewed asset, meaning you're appreciating more upside than downside over time. And so because of those characteristics, it actually just having a 2, 3, 5% allocation to Bitcoin in and of itself within your diversified portfolio increases your risk adjusted returns, meaning your returns go up and your risk actually goes down across the portfolio. And so that in and of itself for us means it is a diversifier. Um, but I totally get your point, right? It's Bitcoin is a store of value asset, $2 trillion market cap. And then you have other protocols, networks, which we're definitely not experienced in. I mean, that's why folks lean on you at WisdomTree to kind of solve that aspect of it. But that should be viewed as a different type of segment in our opinion.
I fully agree with what you're saying. And yes, I see some social media posters say, oh, Bitcoin is moving together with this equity or that equity. And I say, no. If you look at correlations between Bitcoin and other asset classes, they are around or below 20%. And you can take a look at the last 2 years, 5 years, since the end of 2013, Bitcoin is not correlated. So it's a really great diversifier. And this means that once you have smaller allocation within the multi-asset portfolio, the return impact that is there because of Bitcoin is visible, while volatility impact is invisible because there's only a small increase. And for investors who have logical allocation, who rebalance on a monthly, quarterly, semi-annual, or annual basis, Bitcoin improves the outcomes of their portfolios, or tends to improve the outcomes of their portfolios. But 3 minutes ago, you talked about stuff being built on Bitcoin. Can you please talk more about this? Like, there's Bitcoin, like, I know Bitcoin as a store of value asset, Bitcoin that people can put the money in and just keep it in their portfolios. But what activity is happening on Bitcoin chain as a whole?
Yeah, so I think the one thing that people are most familiar with is the Lightning network. So a layer 2 that can really do more, facilitate smaller payments where you're not having to always finalize a transaction on the Bitcoin blockchain. You can do it at the layer 2 vis-a-vis the Lightning network. And there's other side chains and layer 2s that are kind of helping facilitate smaller micro payments done, on top of the Bitcoin blockchain itself. There's been other things out there with, I guess what you call Bitcoin DeFi or other types of layer 2s that people have been looking to develop. I would say it is still, at least in our opinion, very small and nascent relative to, say, if you were to compare it to DeFi on Ethereum or Solana or other types of protocols. But I think that's a feature not a bug of Bitcoin, right? I think Bitcoin is meant not to be changing at the protocol level. I think things need to be very slow and deliberate in terms of innovation that happens with Bitcoin, because at the end of the day, it is a store of value, digital capital, money, right? And you can't be constantly tinkering and changing things around. And so, yeah, I mean, we'll see how it all plays out. I think, all that has been very lower on the interest spectrum in general relative to, say, what's happening with treasury companies, and happy to dive into that if you want. But yeah, it's I think it's definitely exciting to see across the board what's happening within the Bitcoin ecosystem.
Exactly. I love that you brought that up. That was going to be my next question in terms of how you view DATs in comparison to, because obviously the focus of a lot of these DATs is to buy Bitcoin or buy whatever treasury asset they want to hold. But to your other point, it's the ecosystem development behind that. Everything that goes beyond you thinking about payments, RWA, something that we're very focused on in the US side of the business. How do you guys, I guess, separate those two lines of thought and philosophy in terms of how you invest, how you allocate?
Yeah, it's a good question. I think at the end of the day, Bitcoin is for everyone, and I think this was a matter of a time where Bitcoin would be adopted into traditional corporate fabric of capital markets and institutions. And to your point about RWA, right? That's bringing real world assets on chain or tokenizing. This is really the opposite, going the opposite direction, right? We're bringing a digitally native asset like Bitcoin into a traditional financial wrapper to where institutions, groups who normally couldn't access Bitcoin now can't through a wrapper that they're used to vis-a-vis an equity or a convertible note or some sort of structured credit type instrument. And so that's really the big idea that Michael Saylor pioneered back in 2020 when he launched his first purchase of Bitcoin at the strategy corporate level. And it really shows that if you look at what strategy is doing, right, they're carving out different products and parsing out Bitcoin's return and volatility for different types of investors. And so you can own the equity of MSTR or of strategy and go through that volatility and effectively get somewhat levered exposure to Bitcoin based on the performance and how much they accrue Bitcoin per share. Or you can go up the cap structure and potentially invest in one of the preferred shares that he's launched, right? And carve out a 10 to 12% dividend rate. But he's effectively giving that to you by cutting off some of the volatility underneath. And so he's creating different products and services for investors that want a different risk return parameter than, say, just outright Bitcoin. And then if you look at kind of the global scale of Bitcoin treasury companies over the last year and a half, um, I think they've really solved a unique challenge in certain markets, certain capital markets that can't easily get Bitcoin exposure. So if you look at Japan, there's a company out there called MetaPlanet, which is a Bitcoin treasury company. And really why I think they were successful from the start is one, there was no Bitcoin ETF for local investors to buy. And two, buying Bitcoin, spot Bitcoin in Japan was much more tax prohibitive than buying an equity. And so it was much more tax efficient to own the equity, easier to buy within an individual brokerage account than it was to own the outright Bitcoin, at least for that Japanese investor base. So I think these Bitcoin treasury companies are also solving potential frictions across different capital markets. Now, to your point, right, I think the phrase now DOT has gotten really popular and it's expanded to other digital assets. We just focus on the Bitcoin space. I mean, we think all the value, most of the value is going to accrue to Bitcoin and Bitcoin treasury companies because you're taking a digitally native asset, store value asset, and moving it to a wrapper that institutions and large capital allocators can now invest in.
And sorry, go ahead, Dovile.
Well, I was going to say that as we see large institutions allocating to Bitcoin, yeah, various wrappers, and there are many good data sources. We can see that now nearly 20% of Bitcoin is held by institutional investors. And then when I see this growth of institutional adoption, I also observe that Bitcoin's volatility, realized volatility, is coming down. So now Bitcoin's volatility is below 40% per annum, when I look at the past 90 days annualized. Do you think this will continue? Because when large institutions come in, they seem to come in, hold. So we are getting rid of retail-driven panic buying, panic selling. At least that's what I see in the figures.
I agree. I think as more adoption comes into the Bitcoin space, more institutions who are very programmatic and disciplined with their rebalancing are in the asset class for the long run, not trying to trade it, not taking on excess leverage or kind of getting over their skis on too much risk. You're going to see that volatility come down, and you have, right? You really have over the last 5 years, especially. I think the advent of the ETFs is a big deal in terms of bringing down that volatility. I think more adoption at the treasury company level too, because these treasury companies, if they're successful, theoretically should be holding Bitcoin in perpetuity, permanent capital vehicles that aren't looking to sell that Bitcoin or trade it. And then if you think about potential nation state adoption, we're not there yet, but look at what happened with gold in 2025. It added over $10 trillion in market cap. That's 5 Bitcoin market caps in size in 1 year. Take the first 3 weeks of this year. Today is January 23rd. Gold and silver combinedly have added over 2.8 trillion in market cap just this year alone. That's almost double the Bitcoin market cap right now in just 3 weeks. And so when you think about the opportunity set and where we are, it's still very early, but this is a store of value asset that will gain institutional adoption that we think eventually will be on par with gold, with other store value assets. And that volatility will gradually come down as that adoption comes in.
I think that piece is really interesting, mainly on your comparison to gold. I think that's something that in the industry we talk about a lot, right? Is that it is a store of value. Do you find that when that unlock or that education piece, when you're trying to raise capital or convince investors, either institutionally or retail, about Bitcoin, do you find that obviously it's an easy sell to say, oh, it's basically digital gold, right? But I think to get us over the hump, there are certain differentiators that obviously Bitcoin has that gold doesn't have. How do you go about that process? Because then that's, I think, what takes us over the ledge.
It is, and it's multifaceted. And to your point, you got to meet investors and folks where they're at. And we were all there at one point with our education on Bitcoin, and really, for me, it took multiple iterations of review and research to really get it and understand it. And I think the digital gold analogy is great. It's fine, but it's much more than that, as you know, right? It's the fact that you can move value across the internet, at the speed of light, final settlement. I can send you a Bitcoin, either you a Bitcoin or half a Bitcoin or 0.001 Bitcoin,
Please do.
and you'll and you'll get it, and it'll be settled within the next 10 to 30 minutes, and there's no reversing of that transaction. And so what I tell people too when we have these discussions is like, buy a little bit of Bitcoin yourself, put it in a wallet, work on moving it and transacting it, because I think that really hits at home is when you actually use Bitcoin and you move it and you see that, okay, wow, this actually worked. I just sent it from my wallet to her wallet and it got there, and there's no centralized party that facilitated that. It was all peer to peer. I think that's really kind of the big unlock is getting folks to actually leverage and use the Bitcoin network to really understand it. So that's part of it. I think the second part is just kind of walking through the fact that we've never had an asset that has finite scarcity, right? Bitcoin's value is underpinned by the 21 million fixed supply that cannot change. Once that supply is altered or changed, Bitcoin no longer has any value, right? The whole value is underpinned on the fixed finite supply that's verified over a decentralized network and secured by real world energy. And so that's the beauty of it is once you start saying, okay, well, look at all the other assets in your portfolio. You have real estate, you have equities, you have bonds, you have cash. All of that could be printed or grown more, or you can increase the supply of every one of those assets, even gold, right? As the price of gold goes up, what happens? More and more miners come online. They take more and more investment risk to go find more gold because now they're incentivized to do so. And so there's really no other asset out there today that actually has true finance scarcity. And so I think getting that point across is also very, very important. Yeah.
And also talking about this, so I always talk about Bitcoin being capped at 21 million and this cap being reached by approximately 2140. So in a year when none of us will be alive, unless there is some medical miracle and that's keeping us here. And people ask me, can you change the code? Can you remove this cap or can you increase the cap? And I tend to answer, yes, you can, but then Bitcoin goes for a hard fork so that this new Bitcoin is created. And most people, I say, will stick with the current version of Bitcoin because they like the cap, they find value in cap, as you were just saying. So how do you deal with these types of arguments that, this is just code can be changed?
We get that one a lot where it's like, why can't I just create Dovile coin or Vinh coin or Loren coin, right?
Yeah.
It's like, well, one, look how much energy is actually backing the network, right? We'd have to have all of that energy from the miners switch over to your coin. Two, Bitcoin has been operating with basically no downtime for 17 years. And so it has the network effects, it has the Lindy effect. It totally is a Lindy effect. The longer it survives, the stronger it gets, the more anti-fragile it gets. Three, no one knows who is Satoshi Nakamoto, right? Bitcoin was this gift that was given to humanity, and there was no person or a group of people that were directly benefiting from that creation, right? You can't say that about any other digital asset, good or bad, right? The fact that Bitcoin was created and then the founders walked away from it, and Satoshi's million Bitcoin are still there, haven't moved, it is a big deal too, right? So you don't have the centralized point of attack with a founder. So those are kind of the biggest things. And then precisely to your point, the second you try to change it, the network will just and the folks will just go back to the original chain and continue as usual. And so your Loren coin no longer has any value. And we've actually seen that in the past, right? Bitcoin Cash, a few other ones that have spun off that tried to be a better Bitcoin. What have they all trended towards? Zero.
Yeah.
Yeah.
Oh, they have a few billion, but it's nothing in the scale of Bitcoin.
On a relative basis, when you're talking about a $2 trillion asset, and they definitely did not take over the Bitcoin mind share.
So kind of counter to all of these points then, like what are your common hurdles that you're seeing with institutional investors? What do they typically say in terms of, I don't like this investment, I don't see why? Are there common ground? Is it kind of a broad stroke across all these different points?
It's always a little bit of a different wrinkle depending on where folks are at. The conversations tend to be easier when they said, oh, I own a little bit of Bitcoin myself personally, because then they went through the exercise, like I said earlier, of actually interacting with it and using it and figuring and kind of going through the research themselves personally. But I'd say the number one thing is the volatility. As we know, capital allocation investors don't want drawdowns. They don't want volatility. It's protect capital first, get growth and appreciation second. And so when you're dealing with big pools of capital, institutional investors that really need to protect that base, the volatility does lead to some apprehension. I would say there's also just general just not wanting to be early relative to maybe their peers. There's risk in that. And so that's on us in this industry to really be out there educating and doing things the right way, and giving reports and whatever they need to feel comfortable with holding an asset like Bitcoin. I would say over the years there's always been different aspects that people get really hung up on. A few years back, it was kind of the energy consumption concerns. Obviously, now that's not a concern because now AI is by far a greater energy consumption industry than Bitcoin by far, and no one seems to care or mind anymore. Right now, you probably heard this, quantum is out there, but no one really understands it. So our view is that quantum is potentially a risk, but it's not a risk today, tomorrow, even probably in the next few years. It's something that I think we all need to prepare for and think about, but it shouldn't deter you from a potential investment, at least today. And so there are things that pop up over time, but I think at the end of the day, it's really just trying to level set why Bitcoin is beneficial, but then also understanding that it is foundationally very different than everything else you've invested in prior.
Yeah. And I couldn't agree more with what you were, the situation you were describing earlier about just try it out. Get a wallet, move capital around, see how much control you have, how much autonomy you have over your own, sources of capital that you don't have to rely on any intermediary. I think that's a very powerful sell for a lot of retail folks, at least.
Yeah.
So I think kind of taking that one step further, then like now that I have the Bitcoin or any other digital asset, rather, like what are the types of things that I can do with the Bitcoin that make it more useful, right? That make it more relatable to common people, because I think I could hold it right as an allocation and I could just see it grow. But then I think the exciting thing is what I can do with that capital once I have it.
That's an interesting point, is because the thing is, just holding it has gotten you a 40% CAGR over the last 10 years. Compare that to anything you own in across VC, private equity, traditional equities. Like, you're probably outperforming most things over that time period, just holding it. And so I think that's the key, is saying, look, like, you don't need to have utility for this. Yes, there is things getting built on Bitcoin. I think there's going to be a lot of interesting stuff that happens from an infrastructure standpoint. But even if you just hold it, you've gotten a 40% CAGR over the last 10 years, just using it as a store value asset. And that's the other thing I think folks get hung up on, is the fact that there's no cash flows, there's no utility. It's like, well, it doesn't really need to be utility. At the end of the day, the value comes from the absolute scarcity and the store value aspect of it. And then you can use it as collateral. I think maybe one of the biggest use cases, utility down the road, and a lot of services have been coming out with this, but is actually lending against your Bitcoin, using it as collateral, right? So now I don't have to sell it, I don't have to pay capital gains. I can take out a loan that's over collateralized with the Bitcoin, that's very transparent, it's held in a separate address that I can see and verify that is there, and borrow from my Bitcoin if I want to use it for purchases or leverage or whatever it is. So I think that is really kind of the biggest use case, is being able to use it as collateral. And down the road, if Bitcoin is a $20 trillion asset, or $1 million a coin, that collateral, that liquid collateral, has a lot of value, just in and of itself. If you want to buy other businesses, other things, do things with it. So I think that's the great thing, is that you don't have to actually have too much utility with it. You can just leverage it as collateral.
And actually, one interesting thing that I was discussing today here in Milan is the fact that Bitcoin is trading 24/7, and many institutional investors do not have the necessary operational setup to have an asset or to monitor the asset that's trading 24/7, because they are still operating in 9 to 5, Monday, Friday window. So have you had these types of discussions that you don't actually have to worry what's happening with Bitcoin overnight or what's happening with Bitcoin during the weekend? Just treat it, look at it every month, every quarter. Just you don't have to proactively touch it all the time.
So, well, and that's the thing with Bitcoin, it's not meant to be a tradable. It's not, you can trade it 24/7, right? I can liquidate it whenever I want. If I hold it in a cold storage wallet, or in a wallet, but like, if I own the ETF or own another product around it, it's like, well, it should be a long-term investment, right? No one knows where Bitcoin's going to go in the short run. I think in the long run, it's shown that really consistent growth of adoption, and so it should be an asset that you hold for at least 4 years to reap the benefits from a performance standpoint. So if you're trading it around and trying to time it, and say, oh, I can't, if I have an ETF, I can't trade it at 9 p.m. on a Sunday. It's like, well, you shouldn't be trading it at 9 p.m. on a Sunday, right? You should be holding it for really in perpetuity, but at least several years to enjoy those benefits. And so, but that's also a feature, the fact that I can trade it if I hold it at 9 p.m. if there's some geopolitical event or some issue. Like, Bitcoin is usually the first thing to act, because it's the only liquid 24/7 traded asset out there. And so that's a feature of it, not a bug.
Yeah, Bitcoin is the first one to react, and it's always fascinating watching what it's doing during the weekend. But I always say, everybody, please do not panic buy or panic sell anything. So monitor and come back with a clear head on Monday, and then see what you want to do if you want to do anything still.
Yep. I wholeheartedly agree.
And to kind of expand on that, I think when we talk about institutional adoption and the flows and the unlock that you mentioned earlier, Loren, how do you see that new inflow of different types of capital, whether it is retirement accounts or hedge funds, private equity companies, debt, and even eventually with the retail flow into this at scale? How do you see that impacting that J curve type of growth that we have seen over the past 10 years?
I think we're still in the very early innings of institutional adoption. And, if you look back 4 or 5 years, people thought it would be crazy that we reach 100,000 a coin in Bitcoin, right? It seemed like such a far goal, lofty goal that we'd never reach, right? It was laser eyes on Twitter and until we reach 100K. And it felt like it was just some like lofty thing that we would never hit. We're there now. And now the fact is you have this track record over a decade and a half where it survives. It's a macro asset. Institutions are now starting to get involved. And I think the sky's the limit when you're dealing with a finite asset like Bitcoin that's has finite scarcity, and you have trillions and trillions of capital that is now looking at it, that is interested. We're just at the very beginnings, right? So, and that's going to be across individual investors, institutional investors, corporations, nation states. Like it's just really starting.
It's funny that you mentioned the trackers, because I do remember, like, when is it, a year ago now, like every single coin price tracker was having like a countdown until 100K. And now that we are 10K from it, it's like a miss. Like, people are expecting it now, right? They're like, oh, now we're dumping, it's over. And I think that's like the constant push and pull from the industry that we get, where it's like, guys, we waited 10 years for this, and now we're basically there. We're still there, and not everything is the end of the world. So it's interesting to see how price action really impacts kind of the broader sentiment.
I think it's very important to zoom out on that too. Yes, we did end the year down 6% in Bitcoin for 2025, but we also hit all-time high. We hit 126 during the year. And guess what? That was only like 120 days ago where we were at all-time highs.
That's
above eBay, right?
Yeah.
And
People
so
forget. People forget. They're like, oh,
people forget. Like, let's zoom out. That was literally only about 3 months ago where we're at all-time highs in Bitcoin. And so, no, I think to be in this asset, you got to have a long-term time preference. You got to have a low time preference. You got to have a long-term investment horizon. You got to know that there is going to be volatility, but that's where the opportunity.
I think this is a brilliant point to end our discussion, because everybody has to have some allocation and have long-term allocation without needing to try to time the market, because the asset is scarce, demand is growing, supply is not linked to it to the demand at all. The issuance of Bitcoin is coded, and once the limit is reached, and there'll be no more. So yeah, it's a brilliant point. Any last words, Loren, from your side?
No, well, thank you for having me. This is a really enjoyable conversation. And I would agree with that, Dovile. At the end of the day, Bitcoin is about, I think, 20 basis points of kind of total investable assets. If you kind of look at it across money, equities, fixed income, alternatives, real estate. So if you don't have any Bitcoin exposure, you're actually structurally underweight Bitcoin. Right. And so you're making an active decision to not have exposure, to be underweight if you don't have any exposure. So I think we're well past the time of like, should I have some Bitcoin? Should I not? It's like, well, no, the market's saying you should have at least 20 basis points of Bitcoin exposure in your portfolio. And if you don't, you're taking a active bet that you're thinking Bitcoin will build.
Totally agree. But I use not 20 basis points, I use 1.2%, because I only look at listed tradable instruments. Because if you look at real estate, you can't buy every single asset, every single house. So it's too broad of the investment universe for most institutional investors. But yes, not having any is an active underweight.
To clarify, the views and opinions expressed on this podcast are those of WisdomTree and UTXO Management, and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results.